stocks is one way that people grow their investment portfolio and secure their financial future. To invest, you'll need to choose between using financial advisors or online trading platforms. So how do you choose the best way to invest? Joining us to discuss this is Peter Sashecki from Everything Financial. Peter, thanks for coming in.
Good morning.
Good to see you.
Nice to see you.
Okay, online trading platforms. For people who don't know, how do these work? What are they and how do they work?
Yeah, there's two different types. There's a type where you can actually download software that has a lot of research for you into different stocks, and you choose your own trades. Okay. And then there's the popular ones that everyone sees in commercials where they're discount investment companies who promise you way better returns because their fees are so cheap and they do the investing for you. So there's two different ways to do it online. One is an easy sign up, give them your money, let them do it. Or you want to sit in your basement and drink Red Bull and do your own trading, which people do.
But it sounds dreadful. Okay, but fair enough. So how does being a hands-on investor versus being a more passive investor affect how you may choose to use your money?
Well, if you don't have the knowledge and you don't know what you're doing, it can be a lot of guesswork. And people will tell you when they make lots of money. And it's really cheap because the price per trade is very inexpensive. But is that your full-time job? Or should you be deferring to the experts?
What does the fine print say when using these online trading tools or platforms?
Well, they have no risk involved. But some of the online trading companies where they build the portfolios for you, and there's a lot of popular ones out there, they're promising that you're going to earn way more or a much larger percentage because the fees are so cheap and the returns are so good. But the fine print is, when they give you these examples, is really they're taking their best performing portfolio and showing you that rate of return versus the fees for their cheapest portfolio. So they're not comparing equal portfolios. So it makes the rate of return look much larger than it really is. And that fine print is on the screen for about a second.
Okay.
So you got to read real quick.
Real fast. It's really small, probably.
And it is very small, yes.
Okay. So how much does the type of investment, for example, investing in crypto, ETFs, determine the best approach for how you're investing your money?
Yeah, well, the stats actually show, and especially you mentioned ETFs, because you and I talked about this, I think back in March, actually, about mutual fund rate of return, which is less than an ETF rate of return, because you're getting roughly the same portfolio, except in the ETF, you're getting it at a much cheaper cost without all those embedded fees. But then you versus a portfolio management company where it's actually active investing, and the average rate, and this is just stats, and anyone can make stats look the way they want, but it says it's about 4.5% larger per year using an active manager than an ETF. And the Bitcoin type stuff, buyer beware, because yes, we know of Bitcoin.
Right.
But what about all those other ones that just seem to disappear into Never Never Land and your money is gone? And there's a lot more of those than people realize, where the digital currency just disappears and you don't have it. It's not always the way, but there is too many of those stories. So with any investing, you know, and especially doing it on your own and so on,
there's a lot of risk involved there.
Thank you. And I didn't even prompt you for that. Take the risk of what you can afford to lose, because you know what? Don't risk more money in something very speculative than you can afford to lose just in case. Build a base first of kind of the guaranteed or secure money, build your plan. And there's nothing wrong with having some fun with some money later, but make sure it's that money that if you do lose it, it's not going to drastically affect you or your family's life. Or go to Vegas.
Right, just some play money, but it doesn't really impact your future, essentially.
Yeah, for sure.
Okay, good advice. Peter Sashecki with Everything Financial. Thanks, Peter.
Thank you.
Have a good day.
You too.